General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock out this work. Wednesday, 5/7/25. My stomach growling. What did I eat today? Oh, I ain't eat nothing. Let's get this Forex Factory. These headlines are so just dynamic. It's like Donald Trump is breaking Xi, I believe is how you pronounce it. He ain't breaking Xi. They're just negotiating a deal. They're just so dramatic. Unemployment tomorrow, 8:30 news. Perfect day. CME Fed Watch. So now let's see. It was some data that came out today. That's kind of important. And we got a fresh set to June 18th. So we're at 19% no change. .9% no change for June 18th. I'm gonna keep tracking this until we get closer, and then I'll go into the next set. Because I got a feeling, well, I'm 100% sure that they're pricing in cuts on the next set, but I really want to watch this set. Tomorrow's Thursday. Coinbase should do good. Okay. All right. No top 10. NASDAQ companies report tomorrow. Dollar on the daily. It's pushing back up. So it is coming for this, which is what I wanted, but it's just taking its time, which is cool. There'll be some swing trades here in the future. I don't think we got that. Nope, we didn't. Okay. Okay, looks like we headed back to take out buy side liquidity. Back to normal. For today, NASDAQ, like by Wednesday, I like to be done. So when it's like not done on Wednesday, let's target hit. But when it's not done on Wednesday, I'll be like, I'm not too enthusiastic about catching the move of the week because it's only 2 days left. All right, target hit. Also note we hit EQ of previous week's range. Look at the weekly. Inside week holding strong. This is, where's the fib for this? Should just be here. I still want to see that high ran. So far it's the inside week. I want to see that high win before we drop. I want to see the high ran before we drop. So far it's the inside week. And the only key level I see a reaction off of is previous week's range, EQ. Check out the daily. We wicked. It feels like it'll be a slow climb, but still a climb nevertheless, because we took that candle's high. We didn't close below either the high or the low. Let me look at this delivery more exact to determine whether we close. What do we do first? Tuesday, Wednesday. Okay, so we took the low first. Tuesday closing price. Wednesday open price. Okay, so we took the low first. Go here. Did I already get that link? I did. All right, no. We swept previous candle low, previous day low, created a wick, and then pushed up in the day. Did not close above previous day high. Wick the high and then close below. then close below open price. So also note we opened with the gap up. So matter of fact, it should go note and then also note. No, we opened with a gap up. Also note we swept previous day low, created a wick, and then pushed up in the day. Did not close above previous day high, week to high, and then close below open price. Bullish DR created with this daily candle order of delivery. Let's go H4. Boom. Push the high, push the low, then push the high. So we actually gapped up here. Yeah, this thing just bing, bing, then bing. Because this is previous day's high, previous day's open price. So interesting. So this is actually, what's this, Monday open price? Sunday. This is Tuesday open price. Yeah, it's Tuesday candle open price. That's gone. Let's see if this tagged this perfectly. Nope, it didn't. This tagged this perfectly. Wow, it did. Higher prices from here make sense. Higher prices from here make sense. Previous day highs, low hanging fruit. Let's see if we got some interesting key levels to key off of. It's not even previous day high. It would be it would be previous day high because this starts day candle. We close back in EQ. No, we close back in EQ. No, we close back at EQ. Target is previous day high 20. 136.25. Buying retracements. We'll have to use session liquidity or H1 order block. So target, or not target, but alert here. H1 with a block tap. They switched this up because I was doing alerts different like yesterday. H1 OB alert. Ready for the day. All right, that's that on that. Y'all have a good day. Peace.